Today, we'll be talking about the merger between Keppel Offshore and Marine and Sembcorp Marine. If you're a shareholder of either companies, stay tuned to find out what our views are. So, what is this merger about? Sembcorp Marine and Keppel have signed an agreement to form a combined entity called 𝗵𝗲𝗰𝗙. This is a multi-step process where Sembcorp Marine shareholders will exchange their shares for the shares of 𝗵𝗲𝗰𝗙. Next, Keppel will inject its offshore marine assets into 𝗵𝗲𝗰𝗙 in exchange for 56% of the shares in 𝗵𝗲𝗰𝗙. It will then distribute 46% of the shares in 𝗵𝗲𝗰𝗙 to its shareholders through a dividend in specie, which means that all Keppel shareholders will get some shares in 𝗵𝗲𝗰𝗙. The merger could help to enhance the profitability of both companies through cost and revenue synergies. Cost-wise, both companies will be able to enjoy economies of scale and remove duplicate costs. With a combined order book of $6.4 billion in the areas of offshore renewables and new energy solutions, the merger would enable the company to emerge stronger as their capabilities are combined. Both companies already have existing work in this new area of growth. For example, Sembcorp Marine won its first offshore wind power project in 2014 and has 3 additional wind farm projects since then. Keppel has also signed an agreement with Sumitomo to explore ammonia bunkering in the Singapore market. In our view, Keppel is the clear winner in this transaction. By transferring its offshore marine assets into this entity at an attractive valuation, it will be able to book a very attractive gain for its shareholders. It will sell its old rig assets into an asset company and move away from this business that has not been doing well. It will also receive $500 million in cash that will help to improve its balance sheet. On the other hand, there isn't much to cheer as a Sembcorp Marine shareholder. Sembcorp Marine will contribute the bulk of assets towards 𝗵𝗲𝗰𝗙, but its shareholders will receive only 44% of the shares in 𝗵𝗲𝗰𝗙. With that said, the merger is not confirmed. It is still subject to approval by shareholders of both Keppel and Sembcorp Marine, and the vote is expected to take place in the 4th quarter of this year. It is also subject to regulatory approvals, even though Keppel CEO has said that he does not expect any competitive issues. To summarize, we think that Keppel shareholders are the key beneficiaries from this transaction. On the other hand, we'll be less excited if you were shareholders of Sembcorp Marine. If you are looking for other renewable companies in the Singapore market, we would also suggest looking at Sembcorp Industries, which was the best performing stock in the Straits Times Index in the 1st quarter of this year. If you found this video useful, hit the like button and do follow us on Instagram, Telegram, and Facebook.